the US All Spot. And on the US All Spot, we have quite an interesting situation going on in the market lately. And in fact, if you remember, last week we had the privilege of capitalizing on both buying and selling opportunities. And as it is, in the last 1 week, we saw how the oil prices popped back up again, and in fact trading above the $75 level during last week volatile situation ahead of the Christmas break. And of course, we also learned about how the Angolan government announced on Thursday that it will leave the OPEC Plus in January, and of course the US dollar also has also made substantial breakdown that could erase a half year worth of gains. Now, with all these parameters with all this behind the scenes situation, what is it going to be looking like from a technical standpoint? Now, to do this, we are going to start our analysis today on the higher time frame, where I was able to identify a simple setup that we will be using to guide our trading decisions for today. Now, right here on the 4 hours time frame, what I did was to take into consideration the nature of price. Hold on a second, let me see. Did I start it from? Okay, yes, from the daily time frame was where I started my analysis for this week. And of course, when you look at the daily time frame closely, you will see that since the month of October, price action has been on a strong bearish momentum. And in fact, if you connect the series of lower highs, you will see that we have a couple of descending trend line, which in fact has been supporting this bearish momentum, as you will see right here. In fact, I have the other one right here, and throughout the course of the last 2 months, price action had remained below the descending trend line to further emphasize the strength of the sellers at during this particular phase of time. Now, in addition to that trend line, we have another level which we will be using as a yardstick to guide our trading decisions for this week. And in fact, the $75 area will be serving as our key level for this week. And in fact, if you go to as far back as the month of November, since the beginning of the month of November, you will see how this price level had played a major role in determining the direction of price action. You can see how this level was more of a buying niche at some point at the beginning of the month of November. Then we saw price break down a little bit, but price climbed up. So it was still serving as a buying niche for a while. I think throughout the month of November, we saw how sellers struggled as soon as price got into the $75 level. And not until the first trading day of the month of December, we finally saw the breakdown of the $75 level. Now, usually when we witness this kind of situation from a technical standpoint, we expect that price action at some point may come back to retest the structure, maybe to incite a downtrend continuation. And one interesting thing about this structure is how the $75 level also shares a beautiful confluence with that descending trend line. And as soon as price got into that descending trend line and the $75 level during the second half of the month of December, we saw how selling pressure resumed around that area. Now, with this information here, you will realize that we are at a very crucial juncture in this market where, depending on how market participant reacts to that $75 level, which interestingly shares a confluence with that descending trend line, will play a major role in determining if we are going to be going bullish or bearish. Now, if selling pressure persists here and price continues to trade below the $75 area, we might likely be seeing a downtrend scenario. However, if price breaks out of the $75 level, then it would have also have broken out of that descending trend line, giving us a sign that the trend line may no longer have the capacity to continue to negate the bullish attempt. And of course, we saw what happened on Tuesday. That was yesterday. We saw this candle breaking out of both the descending trend line and the $75 area. Now, the question at this point, as we head into today's New York session, is will this breakout turn out to be a true breakout, or is it going to be a false breakout where selling pressure will persist below the $75 level to incite a downtrend scenario? Now, to help us position ourselves for the next move, I did identify a simple setup on the 4 hours time frame, which we will be using to guide our trading decision for this week. Now, what I did on the 4 hours time frame was to take into consideration the nature of price action since the beginning of this month. And if you do that correctly, you will see how it has been more of a bullish scenario despite the long-term and holistic bearish perspective to this market. Since the beginning of this month, price action had consistently found higher highs and higher lows, and it was only at this point in time we saw the breakdown here, but immediately we saw price climb back above the structure during the mid-month of December, and since then price action has remained above that trend line. Now, you know how we use our trend lines in this community. As long as price remains above the ascending trend line, we want to be positive in the bullish direction. Now, we saw what happened last week. We saw how price did maintain above the $73 level, above the ascending trend line as well, and then we saw this engulfing candle yesterday breaking out of our key level for this week at the $75 area. Now, with the resumption of selling pressure as soon as price tested the $76.10 level, are we going to see price retrace back into the key level to incite an uptrend continuation, or probably come back into the ascending trend line we identified earlier to incite an uptrend move, or in fact it might not even come close to this level and just continue to find new highs at the breakout of the previous high? Now, with the situation we have here and the fact that price action remains above our key level at the $75 area, let's scale down into the 1 hour time frame so we can see how market participants have been reacting to this area above the $75 level. Now, scaling down into the 1 hour time frame, we begin to see things very, very clearly. So let me quickly share with you what really happened at the beginning of this week. So at the beginning of the week, I was able to identify a range where price action was confined within for about 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 hours. Price action was confined within the $73.90 level right here, and of course the $73.25 area to emphasize the level of indecision going on at that particular point in time. And of course, you know how we do it in this community, especially when we identify a range like this. We do want to exercise patience and wait for price action to either break out of the resistance line to give us an opportunity to buy, or break down the support line to give us an opportunity to sell. Now, one interesting thing about this range is the fact that price action, despite being in a range, price was sitting above the ascending trend line we identified on the 4 hours time frame earlier. Now, with this situation, it more or less buttresses the fact that we do want to be looking out for buying opportunities here. Now, for those of you who saw the structure and took advantage of the breakout of the $73.90 area, well done to you for capitalizing on that opportunity. And if you had it at the breakout of the $75 level, well done to you too as well. Now, with the situation here, if you still have a buy position running, what you want to be doing at this juncture is to move all stop losses, as you currently be having about over 120 pips running in profit right now. And I'm of the opinion that anywhere below the $75 area seems most appropriate to secure all buy positions you have on this current structure. Now, with a well-secured position at this juncture, how do we intend to capitalize on the next move? Well, if you take into consideration the impulsive move that started this week that led into the $76.10 area and the resumption of selling pressure after price tested the $76.10 level, this might likely be some profit-taking activities. As you all know, due to the Yuletide season, there is a tendency for low liquidity in the market. And when there is a low liquidity in the market, there is a high chance for volatile price movement. And because of this, majority of market participants will be very, very cautious in whatever trading opportunity they are taking. And if they take them, they don't want to stay in this trade for quite a long time, and this could lead into some profit-taking activities at this junction. And if it does happen, we might be seeing price action retrace back into this trend line here to incite an uptrend continuation. Please give me a moment, please. I want to attend to some person, and I'll be back in a moment. Thank you very much. All right, so I'm sorry about the break in transmission. I had to attend to something here. Okay, so we could have a situation where price could retrace back into the ascending trend line or even the resistant line of this range we identified earlier at the $73.90 area, which of course still shares a beautiful confluence with that ascending trend line to incite an uptrend continuation. So I'm still not going to be taking out the possibilities of an uptrend situation right here, even if price drops to the downside. So we'll still remain very bullish at this point. So let's see how far this retracement phase will go. Will it go into the structure, or will it go into this one before the uptrend continuation happens? Now, to further make this a little bit simpler for us, let's project the potential area where we think this retracement phase will end before the uptrend continuation happens. So if we bring out our Fibonacci retracement tool, run it through the previous impulse leg, we should be having something like this, and we aim at that area between the 50 and the 78.6% of the previous impulse leg, which happens to be our golden zone area. So we will label this the potential buy zone. So we shall be looking forward to see how the market participant will be reacting to the to this zone today, to see if we are going to be buying from this particular area. So I always like to give my golden zone area a lighter yellow color. All right, so here we go. So what we are going to be doing right now is to see how far will this bearish momentum go. Will it go to as far as this potential buy zone that is between the $74.70 level and of course the $73.80 area, where we shall be looking out for reversal patterns. It could be a double bottom structure, a head and shoulder pattern, or a falling wedge, whichever case it may be. Mark out your neckline, and then the breakout retest of the neckline will welcome buying opportunities. So we still maintain a bullish bias around this area. And please also note that we might not see price may just decide to continue the uptrend from this key level too as well. So depending on how price reacts to the structure will determine what our next line of action will be. So if we see double bottom structures, reversal patterns, or even buy pressure around this area, or we just want to see our signs that sellers are finding it difficult to break through these levels or zone, then we do want to get ready to buy. Then if price does not drop that far, and instead continues to find new highs, then I will suggest that we have a buy stop order above the previous high for this week. This is the highest point price action has been for this week. That is the $76.20 level. So you do want to be marking that level out on your chart as well, as a breakout retest of the structure will definitely welcome more buy positions in this particular market. So let's see how this will play out as time plays out. Now, in as much as we are looking out for buying opportunities, remember that we do always take into consideration the potentials of sellers too. Now, if we look at the structure, what is it that will make us change our bias from bullish to bearish? Well, most importantly, we need this ascending trend line to be broken to the downside. That is a breakdown, retest of that structure. Then we can join the downtrend scenario. So a breakdown of this ascending trend line has a higher chance of giving us a sign that the trend line may no longer be capable to negate all bearish attempts anymore. Now, with this situation, I personally would suggest that we exercise patience and wait for confirmations like a retest of structure before jumping into any sell position. So the breakdown of both the ascending trend line and the $73.90 area looks promising for selling opportunities. And if price continues to drop, breaking down the $73.25 level, we do want to be adding more sell positions to our existing trade. So I encourage us all to mark out these levels on our chart, as we will be needing them to guide our independent trading decisions for today. So the trend line is very, very important. The potential buy zone, I do hope you remembered how we got that potential buy zone. The key level at the $75 area, and of course the $73.90 area, which of course if price does break down that structure, we look out for selling opportunities from there. So this is my simple view on the US All Spot for today. If you have any questions whatsoever, feel free to let me know in the comment section. So I will be taking the next 10 to 15 seconds off to see if there are any questions before we move on to the next asset on our watch list.